these questions. Left with some questions. So first, we will complete these questions and then new concept. Okay. So try to do this ninth question. A CPA quickly prepare financial statement for a WSA corporation without noticing that an asset was inadvertently overstated on the balance sheet by 10%. The investor who had purchased stock in WSA on the financial statement lost $10,000 as a result of the investment. The investor claimed that WSA commit fraud. Which of the following is true concerning whether fraud was committed or not?
Ma'am,
Ma'am,
options
options
please.
C. Okay. Okay, let's discuss this question. A CPA quickly prepared the financial statement of WSA. So, without noticing that an asset was inadvertently overstated on the balance sheet date by 10%. So, it is given that he unwillingly, like he doesn't know about that one of the asset is overstated. An investor who purchased stock in WSA lost $10,000 as a result of this investment. So, because of the loss, the investor claimed that WSA committed fraud. So, which of the following was true, whether the fraud was committed or not? So, you have to give the answer on the basis of this corporation, like whether the corporation has committed any fraud or not.
Ma'am,
Now,
option C,
option
right?
C. Yes, correct. So, since they did not done this act intentionally, that means it was due to negligence, so fraud was not committed since it is a case of negligence, not an intentional something, so that means fraud is not there. Okay, next question. When a taxpayer need guidance for a specific tax issue related to proposed transaction, the taxpayer can ask the IRS for.
Ma'am, option B.
Yes. And Dhanashri?
Option C.
No, correct answer is option B. So when you need some guidance on a specific tax issue, then you can issue a private letter ruling. Okay, so private letter ruling basically is the IRS interpretation of some federal tax issue, which is basically some specific tax issue which a taxpayer or a tax practitioner wants to know about. Okay, so this is called the private letter ruling. Next question. If a CPA recklessly depart from standard of due care when conducting an audit, the CPA will be liable to third parties who are unknown to CPA under the law of. So when a CPA is liable to unknown parties, when he done some, when there is a strict liability, breach of contract, negligence, or gross negligence.
Option B, breach of contract.
And Shravani,
Ma'am, option B.
okay, so both of you are wrong. In case of breach of contract, the CPA is liable only for the person who is in privity, like who is a client or a third party beneficiary, which is mentioned in the contract. Okay, so they are asking, like, when will a CPA will be liable to third party who are unknown to CPA? So under negligence, CPA is liable to again client, third party beneficiary, and some person who are known to CPA, not unknown. But in case of gross negligence or fraud, a CPA will be liable even to those who are unknown to CPA. Okay, so correct answer will be D. Any doubt?
No.
Okay, so let's do next question. A CPA is permitted to disclose confidential client information without the consent of the client to whom a CPA can disclose the client information without any consent. To another CPA firm or a CPA society, voluntary quality control review board.
Ma'am, last option.
Okay. And Dhanashri?
Option A, neither.
Okay. So since I have given you the cases like in case of IRIS, IRIS, like when there is some investigation, some quality control review, when there is some PINA or subpoena from court, or there is inquiry raised by some AICP or state board. So in these case, you can disclose your client information without any consent. So that means if there is a quality control review by a CPA society, then you can disclose your client information. So option number D will be correct. Okay, but to another CPA firm, it is not allowed. Is it clear? So you can remember this by learning this word IRIS. Okay, investigation, review, inquiry, or summon or subpoena from court. Is it clear?
Yes.
Okay, next question. So which of the following are correct regarding a CPA employee of a CPA firm taking copies of information contained in client file when CPA leaves the firm? So when one of these CPA employee from a firm leaves, then what happens to the client information? So what he can do with this information?
Ma'am, first option.
Okay, and Dhanashri?
A.
Okay, so correct answer is option number A. So as a CPA or an employee, when you leave a firm, you can't take any copies of information of your client along with you. Okay, so in any case, you can't take these information when you are leaving a firm. So that means neither one or neither two is the right answer. Next question. The best defense a CPA can assert in suit brought against a CPA for a common law fraud. So in case of fraud, what will be your best defense?
Option A.
Okay, and Shravani? Okay, so let's discuss this question. So when a CPA is found to be guilty on the basis of some fraud, so best defense he for him is like he first try to defend himself by saying that it is not a case of fraud but instead a gross negligence or negligence. That means he has not done something intentionally, but it is due to some unintentional cause. So that means he first tried to prove himself as a lack of center. Okay, is it clear?
Yes, ma'am.
Okay, next question. A taxpayer has received a 90-day letter from a IRS related to audit of taxpayer year 1 federal income tax return. So which of the following is true about 90-day letter? So when we discussed about the tax audit, we discussed that this 90-day letter is issued by IRS. So what happens when this 90-day letter is issued?
Ma'am, first one.
Option D.
Okay, and what about Shravani?
Ma'am, first option.
Okay. So 90-day letter is issued by IRS in case like after issuing a 30-day notice to the taxpayer. So if the taxpayer does not respond in between these 30 days, then 90-day letter is issued by IRS. This 90-day letter represented if you as a taxpayer you have a 90 days, like if you want to file a petition to the IRS, petition in the court. But if the taxpayer doesn't pay the tax deficiency, or like it failed to pay the file to fails to file a petition, then the IRS gives them the 10 days to pay all the remaining taxes. So that means correct answer will be A. The taxpayer has 90 days. So this 90-day letter represented he has 90 days. In this 90 days, he can either pay the tax deficiency or can file a petition. But in case if taxpayer fails to file the petition within these 90 days, then the IRS has 10 days in which it can claim all the taxes from the taxpayer. Is it clear?
Yes.
Okay, next question. It is also related to some 90-day letter. So please read it once. Any guess? Okay, let's discuss this question. A taxpayer received a 90-day letter proposing a tax deficiency of $28,000. The taxpayer's CPA told the taxpayer with the client that a client with similar circumstances successfully sustained such a position in the small claim division of the US tax court. So if the taxpayer decide to file a petition with US tax court, what is the significance of success of the CPA's other client in sustaining the position in the small claims division? So they are asking that if a CPA has like similar situation with some other client, so what will happen? Like if he same if he like choose same position in the tax return for other client, so then what will be the significance of success? Like if they take this matter to a US tax court. Okay. So in this case, your right answer will be C. There is little significance since decision in the small claims division of the US tax court lack presidential value, because this is a something like which is not much of significant, since your US tax court only look for some significant matter, so that means it will be considered as a matter of little significance. Okay. This is a tough question, but you will not get this level in your exam. Okay. Next question. A transaction classified as reportable transaction will not be required to be disclosed on Form 8886 reportable transaction disclosure statement if Form 8886 is not in your syllabus, so it is not much important. Any guess in this question?
B.
Okay. And any other guess? Any other guess? Correct answer is B. Yes. Like a transaction classified as reportable transaction is not required to disclose if the IRS remove that transaction from the list of reportable transaction. Okay. So if a transaction is already removed by IRS, then there is no disclosure is required. Okay, next question. In evaluating the hierarchy of authority in tax law, which of the following carries the greatest authoritative value for tax planning of transactions?
C. Tax court decision.
Okay, any other guess? They are asking for the
Oh, it's
greatest
no.
authoritative
Then
value.
it is
It starts
authority.
at the top. Yes, greatest authority, topmost authority.
D. D. I read regulation.
And Shavni,
Ma'am, second option.
okay. Yes, the correct answer is option number B. So when we talk about the hierarchy, like of the authorities which give their standards related to some taxes, so the topmost is the IRC, Internal Revenue Code, which is issued by IRS. Okay, so this is the most authoritative source. IRS regulation basically comes after this because it is just a like description, like how to apply this, how to outline these laws in IRC. Okay, but your IRC is the topmost authoritative laws in your tax law. Okay. Next is, which of the following defenses? Any doubt in these questions? Uh, Any doubt or
No, no.
okay, next question. Which of the following defenses is likely to be successful in suit alleging negligence by a CPA? So in case of negligence, what will be the best defense a CPA can use?
Option A.
Okay, and any other guess?
Ma'am, first option.
Okay, so both of you are saying option number A. Yes, it is true. So in case of negligence, the best defense for a CPA will be that he has not done any uh, carelessness. Okay, so he has done all his work with due care. Lack of intent means like there is not something intentional, so it is not relevant in case of negligence because it is uh, obvious that in negligence they are suing against you because you have not done something with due care. Okay, ignorance of law, lack of mental capacity, so these are not the best defenses a CPA can use. So best is the due care. Okay. Next question. A civil fraud penalty will be imposed on a corporation that underpays tax by. So fraud penalty, when will it apply?
Ma'am, last option.
Okay. Any other guess?
Option D.
Should B? Okay. So B or D?
D. D.
B. So fraud penalty will be applied when there is something related to fraud. So, omitting income as a result of inadequate record keeping, failing to report, consider not a part of corporate profit, filing an incomplete return, making clear that the return is incomplete, maintaining false record, and reporting fictitious transaction to minimize corporate tax liability. So, what do you think? Which is the case of fraud here? Omitting something as a result of inadequate record keeping, failing to report certain income, but that income is not a part of corporate profit. Filing an incomplete return, but you are making it clear that return is incomplete. Next, you are maintaining false record and reporting fictitious transaction and minimizing corporate tax liability. So, what will be the best case, like in which fraud is happening? B or D?
Ma'am, last.
Yes, correct. So since clearly represent that it is a fraud because they are maintaining false record as well as doing some fictitious transaction and minimizing the tax liability. So fraud tax penalty will be applied. Okay. So any doubt in these questions?
No, Garima.
Okay, so let's move to next topic. So far we discussed about the forms, we discussed about the circular 240, which gives us some rules and regulations related to someone who is doing practice before the IRS like EA, CPA. Then we discussed about some of the penalties which is applied and some of the cases like a pa- in which people can sue to the CPA in case of any negligence, gross negligence, or something fraud kind of thing. So next is about our contract, how our contract are basically formed, which condition should be there to form a contract, and in which case a contract will be considered as void or voidable. Okay. So first of all, what is contract? Any idea? Any idea what is contract? So contract is a basically a legal agreement between the parties that may involve either a promise being exchanged for a promise or a promise being exchanged for a act. So it is a legal enforceable agreement that create obligation between two or more parties, whether they are exchanging some promise like doing some work for another kind of work or providing some services in case of any in exchange of any promise. Okay. So for a contract to be formed, there should be some offer, like there should be some offer between the offeree and offerer. There should be acceptance of that offer. Okay, both the parties should agree to that offer. There should be some consideration, means some amount of money that is involved in this contract. Mutual assent is there. Okay, both the parties should agree to the whatever the conditions of the contract. There should be capacity, like person will be able to enforce that contract, like he should not be in such a situation that where he cannot perform that contract, like he is mentally unstable or something else. Legality means the contract should be legal. There should be not any illegal act, or writing means some of the contract require the agreement to be in written form, okay, which is applicable under statutes of fraud. So all these elements we will discuss in detail in the later slide. Next is method of contract formation. So how does a contract will be formed? So there are different types of contract. First is express contract. Express contract means the contract which is actually formed by like some explicit language. There is explicitly mentioned that there is some contract. It can be formed by written or some oral words. Like a person is saying that I will sell my laptop for $500 to person B, and person B is agreeing that he will accept that laptop in exchange for this $500. Okay, so there is a explicitly statement, like there is a explicitly statement, there is explicitly agreement which may be in written form or spoken word. So this is called the express contract. Okay, any doubt? A person, like there is some conversation between two people, or there's some written agreement between two people that one people is performing this in exchange for some consideration and other people is agreeing to give the consideration and accepting that services are good. Okay, any doubt?
No.
Okay, so next is implied in fact contract. Implied in fact contract means like the terms of the contract are implied in fact. Like contract is decided by the behavior of the persons or the contract is actually formed by some behavior of the people or like conduct of some action between two peoples which make it clear that there is something contract, there is some legal binding between them. Okay, for example, if you are going somewhere and you are going to some cafe and you order something, like it through your order, or if you are accepting that order, it is obvious that there you have some legal obligation to pay after accepting this order. Okay, so implied effect contract means which basically form through the conduct or behavior of some people. Like if you are visiting a salon and sitting for services, it implies that you are like obviously you are, if you are receiving any services you will have to pay. Okay, so this is called implied in fact contract. Is it clear?
Yes.
Next, quasi contract. Quasi contract, basically these are implied in law, like contract which are formed basically to prevent unjust enrichment, like which are not truly some contract but they are implied in terms of any law. For example, like a patient comes to a doctor and have some treatment. Okay, so after the treatment there is a legal obligation that patient must have to pay, like it is stated in the law, like if they are getting some services they have to pay something to the in return. Or if one more example you can say that suppose a doctor treats a patient for free because the patient requested them that they do not have sufficient money or something else, but later on the doctor find that the patient was not actually a poor one but a rich one. So in this case a doctor can like file a case against that patient. This is called the implied in law, that means the patient will be liable to pay to the doctor. Okay, so this is a contract which is like formed in rare case when the court decided the party should be treated if they had an agreement, even though they did not, in order to avoid that one party is being unjustly enriched at the expense of other. Okay, so that one party not get any benefit at the expense of other. Okay, so these are some of the contract formation, like how does a contract is formed. You may have some explicit contract, like which is formed by some actual written or oral words. Implied in means which basically formed through your actions or behavior. Quasi contract, which is basically formed, which is implied in case of law when basically court decided uh, there should be some agreement between the parties so that one party do not get the benefit at the expense of other. Okay, is it clear or any doubt?
No clear.
Okay, next question. Next topic: bilateral contract and unilateral contract. Bilateral means bi means two, or uni means one. So bilateral contract basically when a promise is exchanged for a promise. Okay, so two promises basically are made and in exchange for each other. So for example, A is promising to sell and B is promising to buy. So this is a case of bilateral contract. Okay, unilateral means when one promise is for an act. It means a contract is formed when performance is completed. Okay, so promise exchange for some performance. One party is making the promise that he will perform the work. So promise is being exchanged for the performance. For example, reward contract, payment only made when performance is completed. Okay, when someone do that work, only then the payment will be made. This is called the unilateral contract. So bilateral means promise is exchanged for a promise. Like someone is promising to pay you $500 and you are promising them to provide some services. Unilateral contract means only one party is promising. Okay, so if the party has performed their performance, only then the other party will pay to them. So, for example, someone has party A is will pay $500 if the party B is promising to uh, paint their house. So this is the unilateral contract. Okay. Next is executed or executory contract. Executed means the contract in which all the obligations are fully performed. Okay. A fully performed contract is called executed contract. All contractual duties are being performed. Executory means there is something which is still pending. Okay, some of the duties and some of the tasks still remain to be performed. This is called the executory contract. Any doubt? Any doubt? Bilateral, unilateral, executed, executory. Any doubt?
No.
Okay. And Shravani, do you
No,
have
ma'am.
it? Okay. Next is valid, void, voidable, or unenforceable. So when a contract will be said that it is a valid, it is a void, it is a voidable, or it is unenforceable. So valid means like everything is crystal clear, like all the elements are satisfied, everything is with respect to law. So this is called as the valid contract. Okay. Whereas void means void means which is totally for some illegal purpose. Okay, when any of the parties may escape the contract and other party will not able to do anything because it there is no legal effect in that case. The contract is fully void from its starting because it has some illegal purpose or it is not legal. So any of the parties at any time can escape from the contract. This is called as void contract. Voidable means which there is a possibility that that contract can be voided by any party. Okay, so voidable means the any of the party can escape from the contract and make it void. For example, in case of minor, like if you have make some contract with minor, like who is below 18 age, so this minor can anytime escape from the contract and that contract will become voidable. Duress means if the contract is formed as a result of some duress, uh, some undue influence, some threat, so it will be considered as voidable. Okay. Unenforceable means which the contract which lack something, which lack written form, or there is some statute of limitations passed, so that means it become unenforceable. Like the time duration up to which it was valid, the time has elapsed and it become unenforceable. Is this terms clear to you? Is it clear or any doubt?
Yeah.
Okay.
Next is sources of contract law. So basically, this contract law come under your common law and UCC article second sale of goods. So common law, basically this law is applied to any contract which are related to employment, real estate, some services related contract, some insurance related contract. Okay. So common law rule will be applied in these cases. It basically common law, under common law some uh, requirements are there, like some of the rules which we terms which we discussed later on. My mirror image rule say that, like, if one party gives some condition, the other party should exactly accept that condition. There should be some definite terms, there should be some consideration. So these are some of the requirements for a contract to be formed under common law. For example, a web design contract where acceptance must match offer exactly. So if someone is making a contract, like to purchase something for this amount, then the contract to be formed if the other party will accept the offer exactly, like they do not make any changes to this contract. So this is comes under common law. UCC article second is basically sport the contract which are actually related to some sale of good, some tangible or movable goods. Okay, so if you have some contract related to some tangible assets, some movable goods, then it comes under UCC article second. So under this article, some flexibility is there, like some open terms allowed, no mirror image rule, like some modification can be done without consideration. Okay, so other party need not to exactly match the offer, they can do some modification even even without consideration. Sorry. Okay, is it clear?
Yes, ma'am.
Restatement of contract means like not binding but persuasive, given you are doing some restatement in your contract, used when case law or statutes unclear, silence as acceptance guidance. Mainly this two will be tested in your exam. Hybrid contract means predominant purpose test governing law. Like machinery purchase plus installation. So UCC apply if goods dominate. So that means ki in which hybrid contract means which contains some of the conditions which are related to common law or some of the conditions which are related to UCC. Okay, so these laws we will discuss in detail. So first is your elements of legally enforceable contract. So for a contract to be legally enforceable, okay, it should have legal representation, then there should be some offer in the contract, there should be some acceptance, some consideration, some legal capacity, some legal purpose, some mutual assent, some proper form. Okay, so I will discuss this topic from tomorrow because it is a lengthy one, it will not complete today. Okay, so any doubt, and if you have till here you can ask, otherwise we will start this topic in the next class.
No doubt, ma'am.
Okay, and Dhanashri?
No, nothing.
Okay, then we will discuss next topic tomorrow.
Okay.
Yes, ma'am.
Okay, bye, thank you for joining.
Bye bye. Thank you.
Thank you, ma'am. Bye.